Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin and make sure to check the timestamps to see if a scenario is updated, new or the same compared to a previous update. Starting with the most bullish scenario on the 4-hour time frame, where we have a finished irregular flat in a 3-wave A, 3-wave B and a 5-wave C towards the downside, where the common target for C is the 1-to-1 trend-based wave extension taken from the high to the low of A to the high of wave B. In this scenario, we are looking for a continuation of the trend, which means that locally we're going to be looking for impulsive structures. On the 1-hour time frame, we have over here the potential of a finished 1-2, wave 1 and wave 2 in green, and then another 1 and 2 in blue. The higher degree Elliott wave count is the green count, 1, 2, 3, 4, 5, and then inside the green wave 3, we have the lower degree blue count, 1, 2, 3, 4, 5. What we want to see is the green wave 3 to at least go to the 1.618 trend-based fib extension taken from the low to the high of this wave 1 to the low of this wave 2. This target is sitting at about 72.5k, and generally the 1.618 is a minimum target for a wave 3. There is the potential for a triple 1-2 where we have another finished 5-wave impulsive structure to the upside, and we're looking for a retracement in this area over here. The most common target area for a wave 2 is between the 0.5 and the 786 Fibonacci taken from the low to the high, giving you a target area between 65.5k and 64.8k. The 382 is uncommon, 65.8k, and the 886 is a level you do not want to hit, as that would really lower the probabilities for this particular scenario. An alternative bullish scenario is a leading diagonal in wave 1. So what we're looking for is a 5-wave structure here in this blue wave 1, and then we want to see a 3-wave move to the downside in the blue 2 before then continuation to the upside in a bigger wave 3. In this scenario, the invalidation is just above a price. It is the 1-to-1 trend-based fib extension taken from the low of 2 to the high of wave 3 to the low of wave 4. Reason is that wave 5 is not allowed to be longer than wave 3 in a contracting diagonal. Now, it is common for a wave 5 to either undershoot or overshoot the upper trend line. In this case, it went above the upper trend line here, which is absolutely no problem, but we do want to see price moving towards the downside in this scenario. But as you can see, the result is the same, as we are going to be looking for price to move towards the upside eventually. Now, the probabilities for this scenario are a little bit lower because of this wave 3 over here being very short. This wave 3 did, however, take the high of wave 1, which is the minimum requirement, so that is positive, but it didn't actually reach the usual minimum target, being the 0.618 trend-based fib extension from the low to the high to the low over here. Of course, if price is going to move to the downside impulsively, then this scenario gets a higher probability. Now, the common target area for this wave 2 is the 0.5 to the 786 box here taken from the low to the current high on the chart, giving you a target area between 63.2k and 61.1k. Again, the 382 less common, 64k, and the 886 a level we don't want to hit at 60.4k. We then look for continuation to the upside impulsively. Now, the bearish scenario on the 4-hour chart has changed to this scenario here, either a flat or a sideways WXY. Previously, we had a potential ABC with wave C not yet being finished in a 1, 2, 3, 4, 5, but this scenario is reducing in probabilities every day, and therefore there's other scenarios that now have a higher probability. So the bearish scenarios in this range is that we get a continuation of this range. In this case, the first structure here, the regular flat, is part of a wave A or a wave W. Then we are looking for at least a 3-wave corrective structure to the upside in a wave X or a wave B. Most commonly, a wave X and a wave B are zigzag, so preferably we look for a 5-3-5. And then after X, we would be looking for a wave Y to the downside, which can be either a flat, a zigzag, or a triangle. And after a wave B, we would be looking for an impulse to the downside where we want to see the low of wave A taken. A common target area for X is the 0.5 to the 886, 66.7k to 72.2k, and the common target area for a B in an expanding flat, which is the most common flat pattern, is between 77.2k and 79.2k. At the moment, however, this does not look like a three-wave structure, so we would at least want to see something like this, if not of course a higher high, but in this case, as you can see, we would also be looking for first more upside before then potentially a move to the downside. If price is moving to the upside in a straight line, we are going to look for continuation to the upside because that then has the highest probability. Also time-wise, you can see how long this wave A or W is, and we do like to see a wave X or a wave B at least have some sort of a relationship with wave A or W, and if we take a fib time from the start to the end of A or W, preferably wave X or B ends at least after the 382 fib time, which is sitting on Thursday, the 2nd of May, 6 p.m. Central European Time. If we look at the CVD divergences, then we had some bullish CVD divergences with the drop here to the downside, increasing the probabilities to take this high. And as mentioned during the live stream, the probabilities were already high to take that high because price touched the 886 Fibonacci, as you can see over here. And the 886 Fibonacci is a rare target for a wave 2, common for a wave B or a wave X, which therefore increased the probabilities that this move to the downside was a wave C or a wave Y, which therefore gave an opportunity to look towards the upside. Now price more locally on the 3-minute time frame started to create a little bit of bearish CVD divergences, as you can see over here. Lower high on price, but look at the yellow as well as the blue line. We had a higher high here on the CVD. Bit of bearish CVD divergences already played out as price took these lows over here, and price at the moment is simply ranging. So let's give price a little bit of time and see what other CVD divergences price may form. So if you then go to the probabilities of the different scenarios, then on the weekly time frame, the probabilities are highest for a continuation of the trend and price to take 74k, instead of potential bearish scenarios where we are looking for much lower prices in an impulse for a wave 1, 2 or a bigger wave 3 to the downside. On the 4-hour time frame, the probabilities are also higher for the bullish scenario where the end of wave C is in and we are looking for an impulse towards the upside, with on the second place the new bearish scenarios that I explained in either a WXY or a bigger ABC. On the 15-minute, the probabilities at the moment are higher for a 112 with the potential for a 112, but on a close second place we have the diagonal here where we're looking for a bigger retracement to the downside. But in both cases we are looking for a move towards the upside, and it also counts for the bearish scenario on the 4-hour time frame that we are looking for a move towards the upside before maybe in the future then a retracement to take the lows, but that doesn't have the highest probabilities at the moment. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.